that's normal. All right, so let's have a look at Bitcoin and the charts. I'm going to start with the order flow. So here you can clearly see we've got bearish CVD forming on this local rise. Can you see that? This is bearish. You've got the CVD that's increasing. Yeah, you've got the price that's increasing, but you're putting in lower highs on the price, you're putting in higher highs on the CVD. This is bearish. It doesn't mean the price can't snap out, and like again, the context is really important. The price can always squeeze up and change. You can just always can change, but it's an indicator. It's suggesting that actually what's happening is market longs are being absorbed as the price rises, and so therefore you're getting higher highs in the CVD. You see that the CVD is putting in higher highs, and then the price is putting in lower highs, and so some of that movement is being absorbed by larger limit longs. Here you can see there was a market long here that was absorbed. See that? And then the price dropped. And then when you look at this whole rise, you can see the CVD is actually higher than this high here. And you see the price is much lower. So we're getting quite strong absorption, bearish absorption on this price action all the way from last night through till now. We're getting quite bearish CVD on this price action. So when you kind of look at the charts, you have to kind of put that into context. And so what I was thinking was a drop. We got the drop, didn't I? We got the drop, and I was looking for it to go lower. It didn't go to as low as I wanted, and so the question is why not? But you can see that we got a bounce off the single print bounce. That was what happened. It was bounce. Now we have, even though on the price here on the local time frame we need to put in lower low, lower high, lower low, that's a higher high. Even though we put in a higher high, yeah, sure, the price can go in there, put in a higher low, and this could still kind of, it still looks like a little bear flag forming here. And if the price does kind of drop, and it's more likely to do that than to do the opposite, especially in the context of the bearish CVD that we're forming. So it's quite deceptive, these slow rises. You feel bullish, but possibly not, possibly and probably not. And so I think the next thing that I'll be looking for is exactly what I wanted initially, which was still this, but this time to hit my target, my lower target, which will be the value area high. Now it's a bit messy here, so I probably should remove that and just start over. In the meantime, what I'm also going to do is just kind of hide these and just check to see if there's any updates on the levels, because I haven't done that, and it's good to kind of check. Yep, you've got a daily level there, you see that? So I'll go straight to the levels, and I'll mark it out here. There's your daily level. So that's a brand new liquidity level there. So that's a bullish engulfing candle here on that daily. This is a bullish engulfing. So actually it's not, the bounce isn't a bad bounce. So it is always possible that you go down and put in a higher low. It is possible. But what I would want, I'd prefer us to go down and on the daily time frame, take out the lows, close above the daily level, hold it, and then that's kind of what I would prefer. On the weekly time frame, you see now that daily level up there is also a weekly level. You see that? So that's actually quite a strong liquidity level. This is that previous weekly level. We'll keep it. I'll rename it to So we know it's been washed already. And obviously we've got the monthly, which is much further down. That's a previous level as well. That's also washed as well. You see that? That's washed. So they're not as strong because the liquidity's already gone. On the weekly time frame, you've got this. You've actually got a bearish. This is a bearish engulfing. Okay, you've got bearish engulfing. So potentially a trap, but also potentially a local top here. Yeah, it could be a local top where the price now starts to range for a little bit. We could be in that situation where the price is just ranging here, because you've got some signs of quite strong resistance at these levels at about 119.5, and also with the candles which confirm bearishness. You've got the weekly bearish engulfing, and you've got this strong liquidity level, the weekly level and the daily level above us. Yeah, so it's kind of, we've got the bearish CVD forming now. There's a lot of things that's giving us some bearish clues, and you just got to bear that in mind. Before I was looking at this and I was thinking about a flag. Let's have a look at these single prints as well, because now that they're cleared, or some of them have cleared, maybe we've got some new ones or maybe not. Just refresh this quickly. There you go. You got some single. We're entering single prints right now. Actually, look, see that? Let me mark them down. Prints 114466 214 562. So I have to mark those down anymore. Can you see anymore? I think I've marked these ones higher up. I'll mark them here anyway, just in case I haven't. But I think I have. I'll have a look at the levels as well. There we've got a naked point of control underneath us. Naked daily control. 113620. This one above us has been hit already. The 115660 has been hit. Oh, you got a brand new weekly point of control. That's quite strong as well, huh? Strong resistance levels. 117. So we've got those levels marked. I'm going to go back into the charts now and mark them out. So we've got the single prints here. Let's have a look at those. So the single prints that are indicated. So these ones I can delete now because they're gone. There's an alert on that single print, so I'm going to have to update my alert. 114 4466. We're into it now. And 114562. So we're into some single prints right now. And then higher up we have that one. I think I already marked that out. Yeah. And then we have this naked point of control, so we have a look at that. So we have the one higher up. And 17506. One lower down. 113620. And then we have the weekly, naked weekly point of control. And that is 117506. Oh yeah. It's the same as the same. All right. Put those in different folders. Okay, we've done that. And then also what we're going to do is volume check. We'll do it in with two ranges now. Three ranges. That's fine, there's no changes there. That's kind of widened a little bit. All right, so we get our volume, we get our range high, range low, higher time frame, and single prints. And then the last thing we need is our fib levels. So once we've done our fib, that, so we've already bounced a little bit off the 382, and then the 50% is lower down. All right, so this is the thing, yeah. We're getting bearish CVD. This is where all the liquidity is at right now. So there's quite a lot of resistance above, there's quite a lot of support below, right? We're in a little bit of a kind of a low liquid area. So this is kind of our low liquid area here and here. Okay. So in this area, the price will kind of slip a little bit. And then you're in your big, high, heavy liquid area. It's there and there. That's really the strong areas for resistance at the moment. You see that? Resistance above, support below. And that's kind of potentially here if off the highs, the same idea. You're looking for strong resistance off that trend line if we go up. However we go up, that's quite strong resistance. Yeah, that goes back to my original short idea. So that's still in play. And I'm going to mark that out right now. You wait for the reaction. Once you have a reaction, you have an invalidation, and then you're targeting the support area like that. And then here, obviously, to long is a little bit more tricky because we do have a little bit of a trend line here now. There is a flag still. It's a different kind of flag. But we don't know if the price is going to go up or down first. It could go down and up. You could get like a, this is what I'm thinking, you could get like an A, B, C here. For a much sharper corrective down here. And then once you're into this zone, you're bam. That's your reaction. And then you're looking for once you get your reaction, because the reason why you wait for the reaction is because the price could always shoot past your level, but you still get the reaction. It's still in the same area. So rather than trying to jump in and have a definite stop loss, what you'd rather do is wait for the price to react, and then the price gives you the invalidation because the reaction is your invalidation. Okay, you can have a little bit wider stop, but you have the original reaction. And that's kind of where we're at right now. Depending on what happens first, depends on the target. Because if you go up and clear that liquidity off a reaction for a short, then obviously the next time you go up, it'll be a lot easier to go through that area to the next level. And so then you'll be looking to see, okay, if you did that bounce, then you want to break up. You know, and then that's kind of what you want to see. You want to see a flag break with a strong reaction off the, you know, something like that. Maybe that's assuming we go up, down, and if you go down, up, then it could be different. If you go straight down now, then it could get uglier because it just shows that because you haven't tapped the liquidity above us, and that becomes strong resistance, and it will start looking like a real sell-off. If you start going down now, like you'll probably get the reaction. It could be a weaker reaction, and you know you're back into this range, and then this whole thing is a failed auction. Whereas right now we're still potentially looking at a flag. We're still looking at a flag. It's a much sharper flag. And these flags can't go on forever. They have to break eventually. If they're going to break, they're going to have to break to the upside. So let me just mark this out as Tuesday long short flag break. Okay, no one knows what's going to happen, but this is kind of where we're at now in terms of the areas of interest, those kind of strong areas where I've marked off those lines. And then obviously if people are trading and they want to learn how to trade, then what you'll do is you'll set 2 lines where you're looking to enter. You'd probably front run the entries a little bit, and then you'd set alerts. So you'd have an alert long, BTC long. Make sure it's perpetual, open-ended. You'd have the same thing on that one. There, you've created your alerts now. And so this other folder that I had, I can get rid of this now. Probably. This one, this original one, I can get rid of that because we've got a new one which we've done together. That's it. All right, so that's Bitcoin right now. We're looking at something like that. I've set the alerts. We've got possibly a short there, long there, offer reaction, correct risk management, correct invalidation, which is the reaction, and you have your targets. It's looking like a really sharp flag. If we start to break down, then this becomes a failed auction, whereas now it's still a flag. It's still flagging, but we are seeing quite strong bearish CVD absorption. this is actually let me refresh it again. This just, for me, this just tells me there's a chance that we go down now, like I said, and maybe then we go up, and then maybe we go back down, you know, like, and that's kind of what I'm thinking right now, looking at the bearish CVD. That's why here I've thought maybe we go up, down. I don't know, maybe here I've put I'll go up, but I mean, who knows? We can just go straight down, up, and down. Like, who knows? This could just go down and then up. I'm thinking an ABC here of sorts. So I don't know if it's going to go up then down, because we're seeing bearish CVD. It could, or it could just kind of fall flat and go down, then up. And then here's your ABC. So I'm thinking of an ABC here to hit resistance higher up, and then obviously another ABC down, which will kind of extend like this. It's like this, isn't it? ABC. So that's kind of what I'm thinking when I'm looking at these drawings like that. See that ABCD? And that's kind of why I'm thinking to go up here. You're going to be putting possibly an A, B, C to come into your area to short up there, which is where you want to short, and then down here, which is where you want to long. So longing at about 110,600 or so, shorting at about 116,600 or so, depending on the reaction. And that is it. That is Bitcoin for today. So that was a pretty